Hello everyone, this is Priyanka over here. I hope everyone is doing well. Okay, dear students, already we have discussed about problem number 11 in our previous class. Now, today we are going to discuss about the problem number 12. Okay, I am taking this problem from Pankaj Publication Cost and Control Management Accounting from chapter 5 Techniques of Financial Statement Analysis. Okay, so we are doing problem number 12 ABC Limited comparative balance sheet as on 31st 12 1991 and 1992. So we have to prepare comparative balance sheet. Okay, already balance sheet given in our question. In balance sheet, generally you people know equity, liabilities, and shareholders funds will be there. Okay, and after that, non-current liabilities will be there, current liabilities. Okay, and assets, and after that, fixed assets, other assets, and non-current investments, and current assets. This all already we have discussed, but let's we see once again. So as you people know, particulars, pro forma of a comparative balance sheet, particulars, uh, you know, last year, means base year we will call, and current year absolute change and percentage change. So as in our problem given equity and liabilities, shareholders funds, equity share capital he given 800 in base year and 1200 in current year. 1200 minus 800, you will get absolute change 400. Now for this percentage, already you people already know, formula for this absolute change divided by last year into 100. So change is 400, right? 400 divided by base year. What is the last year? Base year or last year? Same. Okay, absolute change divided by last year into 100 we have to do. So 400 divided by 800 into 100. This formula we will apply to get percentage change. Okay, now capital reserves is 120 and 220 in 1992. 220 minus 120, 100. Again absolute change you got 100. 100 divided by 120 into 100, if you do 83.3% we will get. Now general reserves 4044, and in 1992 4018. Again 4018 minus 4000, sorry, 418 minus 444, if you do minus 26 you will get. Minus 26 divided by 444 into 100, if you do minus 5.85%. Now sinking fund is 80, and in 1992 100 minus 80, 20. Again absolute change divided by last year into 120 divided by 80 into 100, if you do 25%. So we have taken equity liability shareholders as a. Now non-current liabilities, debentures how much? 400 last year. Current year is 650. 650 minus 400, 250. Okay, absolute change is 250. 250 divided by 400 into 100, if you do 62.5%. We have taken non-current liabilities as B. Now current liabilities is sundry creditors is 510, and current year it's 234 minus 500, how much you get? Minus 276. Okay, minus 276 into divided by 510. So how much you will get? Minus 5 minus 54.11. Now others, in current liability, other liabilities. Okay, other liabilities is 14 and 20. 20 minus 14, 6 divided by 14 into 100, 42.85. Okay, we have taken current liabilities as C. Now total equity shareholders funds plus non-current liabilities plus current liabilities, A, B, C. Okay, how much you got here? 2368 and 2842 in current year. 2842 minus last year 2368, you got 474. Now 474 divided by 2368 into 100, if you do 20.02. Okay, now assets, non-current assets. In non-current assets given fixed assets. Okay, in fixed assets furniture less depreciation. Okay, furniture less depreciation is 18, and in the current year it's 36. 36 minus 18, again 18. 18 divided by 18 into 100, how much? 100%. Building less depreciation, how much? 620. Okay, and in 1992, 1572. 1572 minus 620, how much? 952. Okay, 952 divided by 620 into 100, 153.35. Now, land 112 and 148. 148 minus 112, 36. 36 divided by 112 into 100, 32.14. Other assets. Okay, and assets other assets is 112, 148. Land is the 40 and 60. Building less depreciation is 620 and 1572. Furniture less depreciation 1836. Okay, these are all calculations we have did. Now D means what? All this fixed assets 790 and 1816. So 1816 minus 1790, you will get 1026. 1026 divided by 790 into 100, if you do 129.87. Non-current investments is 540. Okay, 540 and 340 in the last year. 340 minus 540 minus 200, absolute change, minus 200 divided by 540 into 100, minus 37.04. Now current assets, debtors, stock, cash and other current assets. Debtors 418, 380. Current year is 380. 380 minus 418 minus 38. Minus 38 divided by 418 into 100, minus 9.09. Okay, and stock 320 in last year, 260 in current year. 260 minus 320 minus 60, you got actually change, minus 60 divided by 320 into 100, minus 18.75. Again cash is 236 and current year 20 minus 236 is the minus 216. Minus 216 divided by 236 into 100, minus 91.53%. Other current assets is 64 and 26. 26 minus 64 is minus 38. Minus 38 divided by 64 into 100, if you do, minus 59.38. This is F value, current assets 1038 and 2842 for current year. Okay, how much you got? Minus 352. So minus 352 divided by 1038 into 100, minus 33.91. Okay, excuse me. Dear friends, give me a second. Here, if you see, okay, sorry, here little mistake is there. So 380 plus, okay, 260 plus how much? 20 plus 26, how much ma? 686. Okay, 686. This is 686. Okay, 686 minus 1038 minus 1038 is minus, are you getting here? Calculator, please say. 352. You will get a minus 352. Minus 352 divided by 1038 into 100, you will get minus 33.91. Okay, total DEF. Total DEF is a 236. Total DEF. Okay, means total assets we are doing 790 plus 540 plus 1038, you will get 2368. Again, 1816. Okay, plus 340 plus 686, you will get 2842. Now 2842 minus 2368, you will get 474. 474 divided by 2368 into 100, you will get 20.02 percentage. This is our 12th problem, comparative income statement, comparative balance sheet. Now see the interpretation. There is a fall in both the current assets and current liabilities. However, the rate of decrease in current assets is less than current liabilities. As a consequence, the short term liquidity position has improved. There has been a heavy increase in financial accounting. This has been largely increase in fixed assets. In fixed assets. This has been largely financed by long term funds and sale of investments. The long term solvency position largely remains the same. The profitability position of the company is not satisfactory, but for the increase in capital reserves arising out of sale of investment, the reserves of the company would have declined significantly. General reserves has come down, indicating past reserves have been used to write off current losses. Overall position can be considered satisfactory as the company is expanding fixed assets. However, careful monitoring of profitability required in the future. Okay, these are the interpretation for every problem in this chapter 5. We need to interpret it. He will ask comment it or interpret it. You have to interpret by seeing the current liabilities and current not only current liabilities, non-current liabilities, current liabilities, equity, shareholders funds total, and after that assets, non-current assets, okay, current assets, and fixed assets we have to take into consideration, and we have to compare. Okay, we have to interpret it. We have to compare. A comparative balance sheet, why we will use, is a statement. What it will shows, it shows the financial position of a business for two or more side by side. Okay, it helps to compare the increase or decrease in assets or in liabilities over time, and it is prepared to compare balance of assets and liabilities of different years to find out what, to find out the changes. Okay, to calculate the difference 2 years, to calculate the percentage change, and we have to interpret it. We have to interpret it. Okay, thank you so much. Let's we discuss other problems also. Please share, subscribe, and like again and again. I am asking. Okay, if you encourage like this, I will try to upload a number of problems related to account subject. Thank you so much. Wish you all the best, ma.